Hi, and welcome everyone to today's third and last session on international investors looking at Germany and their agenda for this year's Expo. While we had to sit out last year's Expo due to well-known reasons, we're very glad to be back in Munich next week. So it is more than time to look at how international investors and local professionals who shall meet again are looking at the current market dynamics. Last fall, Matthias Leube, CEO Colliers Deutschland, and I traveled, so to speak, around the world, looking at investors in Asia, EMEA, and the United States of America during our digital talks. And we spoke about the developments in their respective markets. Now we want to take a hands-on approach and ask international investors how they're looking at German markets. Please join me in welcoming Matthias in our studio, who will discuss the current market dynamics, as I said, together with his guests. He will be presenting them to you shortly. While we look forward to this discussion, we also want to inform you that you're more than invited to join in this discussion and to send us your remarks during our Q&A session, which will start later on through the chat window below the stream. So don't just eavesdrop, join in. You're all invited to let us know how you enjoyed the session, but also to chip in your questions. Finally, it is crucial to us to let you know that we're all tested, vaccinated, and recovered in this studio, so we're safe to say that we can get started and just tuck into the topic. I would like to hand over the baton to you, Matthias, and I'm very excited to hear about your guests and the topic.
Thank you very much, Juliana, and welcome everyone to our last session of our web talk series, Future Ready. I'm really excited on the last 3 days. We covered basically all mega trends and discussed those in the context of society, economy, work. We looked at all the significant asset classes and also looked into how can we provide sustainable investment going forward. I wanted also to thank all the viewers. We had over 3,000 viewers over the last 3 days, including this session at the end, and I wanted to thank all the viewers for their loyalty. We're now entering the grand finale just in front of Expo, and we also wanted to provide our international viewers a glimpse into how people look into the German market. So I'm really looking forward to welcoming my guests with regards to how international investors look at Germany in terms of investment going forward. First of all, I'd like to welcome Antoine Castro. He is the CEO of PAREF and also Fosun Global Partners. He represents the Asian capital in this discussion today, and we are really interested to see what kind of investment style and also what kind of investment strategy you have. Most welcome, Antoine, to this session.
Thank you, Matthias, for inviting me.
Secondly, I would like also to welcome Dr. Constantin Plenge. He is Managing Director for Investments at Tristan Capital Partners, and he represents the UK-managed money towards Germany from international investors. Tristan has been significantly active in the pandemic, particularly in offices. So we are really interested to hear why that is, and welcome Constantin to the session.
Thank you, Matthias, for having me.
Before we start, I would like to start with a chart just showing the composition of capital flowing and being invested in Germany. As you can see from the chart, around 40% of the capital was always invested from international sources over the last couple of years. Even in 2020, during the pandemic, that was the case. In the first quarter this year, it went almost down to zero. But as you can see, it has significantly recovered since then. And also in terms of Expo, we are seeing that a number of international investors will be joining us and are interested in particularly in investing in Germany. So let's start maybe with the questions to our guest. Antoine, maybe you can just explain, PAREF, which might not be so well known to some of the audience here in terms of what is your setup, what is your setup with Fosun, that would really interest the audience, I believe.
Okay, thank you, Matthias. I will provide such explanation and clarification. So PAREF is a French listed REIT on the French stock exchange. So we own directly real estate, but we also manage real estate on behalf of third parties. Third parties being either retail investors or institutional investors. And today, within that organization and that platform, we do have integrated all the services, which include project management, property management, asset management, anything which is related to real estate is going to be integrated within PAREF. And we currently have a main presence in France, in Germany, in Switzerland, and in Italy. And we do have, as of today, 800 million euro of asset under management in Germany, but we opened an office only 2 weeks ago, so that we can build up now capabilities in Germany to directly manage our assets and to build more capabilities internally on the ground. To expand, let's say, on new markets, like in Germany, we look after organic growth or as well to buy platforms so that we can accelerate, of course, our growth on the ground. So we will look at property owners, property companies, or investment managers that we could purchase so that we can accelerate our growth due to local capabilities, but also direct real estate. So this is, in a nutshell, our organization, if I can summarize.
Okay, thank you very much. So there's basically the REIT, and there's also third-party capital, like, for example, Fosun, to my understanding, that is, investing through your vehicles into Germany.
Yeah, so Fosun is a major shareholder of the REIT with 60%, but also what we do on behalf of Fosun is that we can access to the balance sheet of Fosun. We can also access to group companies, part of Fosun Group, which includes insurance companies. So we do as well deploy the capital from the insurance companies that are owned by Fosun Group, as they do have an allocations toward real estate. They are more, Fosun is going to be more a value-add investor, when insurance group companies are going to be more core plus investor within their investment strategy.
Excellent. Thank you, Antoine. Constantin, Tristan has been quite active in Germany over the last couple of years, but still you are basically adopting to market opportunities in terms of your investment style and also in terms of asset classes. Do you like to explain, the setup of Tristan and where the capital comes from, and also what kind of investment strategies you are following?
Sure. So we have currently been investing with two strategies, one of them core plus, the other one value add. Germany has always been a very important market to us. If you just look at the last 12 months, Tristan has completed about 2 billion of transactions across Germany over the last year, bringing our total AUM now up to 3.8 billion or so. And I guess that with our operating partner system, we have always been very strong in the local markets. And that doesn't apply only for Germany, but basically for every European market, as we are a pan-European manager. Our capital sources are all over the place. US, strong European background, but also Asian money, which amounts to about 13.5 billion under management at the moment in Europe.
Yeah, 2 million is quite a significant amount of money that has been invested in just Germany, and it's amazing that you were able to do this in the pandemic, basically out of the UK more or less. Why was that? I mean, I think that is also in terms of your average, a high average over the last 12 months, and I believe it's also quite heavily invested into office, where a lot of the investors are currently still putting a question mark on.
Yes, I mean, it is basically supported by a well-established network of trusted local partners. Yes. So we have been able to identify a number of opportunities off market, giving us an edge in the tight market. That a number of transactions completed in the last 12 months is really a testament to how we work with our partners, how deeply we are rooted in the German market. And if you take some of the examples, the track record of the last 12 months was really not only one or two transactions. I mean, can highlight maybe a larger transaction of 1 billion taking over the Summit platform, or a majority of it with the 69 assets located all over the place, with all the difficulties of doing due diligence during a pandemic. Whereas with our partners, we were able to visit all 69 assets, do an intense real estate due diligence. We also bought in the middle of the pandemic the so-called selection portfolio with our Core Plus money. Again, 7 high-quality office buildings all over Germany. And the Lion portfolio is maybe worth to mention with 23 assets. So we really, with our partners, are able to invest almost locally.
Excellent. And Antoine, how you just said you were just opening an office in Germany just 2 weeks ago. How are you planning to invest, and do you have any kind of preferences in terms of cities or asset classes?
Yes. So in terms of investment strategy, it's going to depend on the pocket of capital that we are working with. So number one, if we look after our retail investors, which are individuals, because in French, we do have a fund management company which raise capitals from individuals, which is a category of investors which is going to look at more resilient asset class, and more core profile. So for such strategy, we have built up a retail portfolio in Germany of roughly 800 million euro in all major cities, but also secondary cities, as we are present we have 64 assets present in 13 regions across Germany. So it's very fragmented, very small assets, all retail, mainly grocery stores, do-it-yourself, hypermarkets, that actually, thanks to our because we do have a property management company, we have been able to collect 95% of the rent. So this has been resulted in a very resilient strategy for us. The investors were very happy. For Fosun, it's very much different because we are looking for value-add products. So during the pandemic, what we have done is we are very much more value-add, and we are looking after the office segment, because when investors are maybe less comfortable with that asset class due to the pandemic, due to maybe the issue on flex office or work from home, which continues to gain importance and requires, let's say, new office concept and working environment. This is the kind of asset class that we are going to look at, because maybe there is some good deals to secure. And we have secured now a deal in Frankfurt, which is going to undergo a heavy refurbishment, and with who actually, just after closing, we have been able to secure a pre-let from a big, an important organization. So this is the kind of opportunity that maybe investors were, number one, not interested on because of the asset class, which was office. Number two, they were not able to visit the property due to travel restrictions. And what we have done for our Asian capital is that we have organized pictures, videos, so that we can get a sense on how the property is going to look like, and a solid due diligence materials, which gave them the comfort to invest in such kind of property. So of course, we have been very disciplined in looking at those properties and providing detailed information to such investor.
Mm. Constantin just explained, local partners are particularly important when it comes to basically doing due diligence in a phase where travel restrictions exist and so on. Was that also the case with you, or were you able to basically look at the assets and by your team, or how did you do that?
Yeah, we rely on our team. We have a strong team which is capable and understand the needs and have the trust from our investors. So we rely on our team, and our team was traveling towards the properties. Now, as we are going to go through such development, we are building up a team locally who is going to take care of a specific project because it's ongoing a 120 million euro capex program, which is quite heavy, and we need to rely on German-speaking people. So we are building up local capabilities. And what we do to accelerate the setup of that platform is that we are building a team
Yeah. So Constantin, you explained, 2 billion in investment. As I said, it's enormous amount of transactions, and also viewing and data, obviously. And you explained, you have your local partners. But when we did, for example, a questionnaire last year, most of the investors responded that they absolutely needed to see the investment. Did you or did the Tristan team personally visit all the assets eventually, or how did you cope with the restrictions or with the new style of doing transactions in this environment?
Well, eventually we did see most of the assets, especially the larger ones and larger portfolios. On a portfolio of 69 assets, you obviously cannot see them all, especially within a very tight exclusivity time. But there were always possibilities to travel from the UK to Germany, to France, to the Netherlands. So I think what helped us was that our partners gave us their opinion. They were managing the services, like technical due diligence services. So whatever was the outcome, it was very easy for us to read and understand the assets. But eventually we did try to see most of them before signing, yes.
Okay.
And I think this cannot be really replaced by the technical possibilities that we have. Obviously, it helped a lot when you came up with virtual tours, which was very helpful. But it would, in my mind, never replace a personal site visit.
Absolutely. And coming to basically the asset class, you invested a lot into offices. We see that this is also obviously the dominant asset class that most investors invest into. But we have quite a significant amount of money that particularly goes into core offices where you have basically long-term leases. And here we see also still price increases while you invested basically more into a value-add core plus situation where a number of investors are quite still reluctant to invest into. What's your perspective on the office market in Germany?
Is it a question for me?
No, Constantin.
Okay. Well, in general, and interestingly, I think in several surveys we have recently seen that many firms, I guess half of them I read, are planning to increase the floor space per person, just for health and hygiene reasons and to accommodate more collaborative working styles. I think at the end, and that applies to the let's say core assets as well as to also secondary locations. The decision to offer flex time on the one hand and to lessen worker density will offset each other. So overall, we think that the office space will probably be much less affected than everyone is discussing at the moment, although we do see that it is a quality question. So even secondary locations, you need high quality assets or you need to manage them to a higher quality. And at the end, with a high population density, the interesting advantage of Germany is that you don't have that one metropolitan city where, I don't know, different to London and Paris, the only epicenters of the respective countries. You have lots of office areas in and around the larger cities. One could say there's maybe a risk of dominating industry. If you take, for example, Stuttgart, a huge hit to the automotive industry might have a bigger hit, an impact on the office there. But we believe that the diversification of the population in Germany supports the office, and not only in the center of Berlin or in the center of Frankfurt, but in location where office space is needed.
Yeah, thank you,
I
Constantin.
agree, Matthias.
Yeah.
I agree with Constantin on that statement, because actually we do see within our portfolio a strong recovery of all our office properties. Our leasing activities has been super active, and we are achieving actually very high. We are receiving very high demand from office occupiers for our properties. So I think the demand from occupiers has been developing very positively recently, and thanks to the high vaccination rate of the staff. And now all those people, they want to get back to their office and to shop in the street. So all the cities and their real estate are going to gain in importance thanks to people getting back to a normal life. And we also see this within our own organization, where all the staff is demanding to come back to the office. They don't want to stay and work from home anymore. So we have been, as a company, actually, we have been allowing staff to work from home 2 days per week. But most of them, actually, they want to go back the 5 days in our office. They don't want to work anymore from home. They want to socialize. They want to get out. And some of our staff doesn't live in 100 square meters. So sometimes they are happy to come back. So I think that recovery of the office sector is going to continue. And I think this comforts us with our investment strategy. And of course, as Constantin said, it's all about then making sure that the property are going to be refurbished so that we can comply with the new office concept and the working environment that corporates are looking for.
Yeah. That's a very interesting, comment, particularly on the refurbishment piece. I come back to where your preferences on locations is, and obviously some of your properties as well, Constantin, are ripe for refurbishment as well, probably. How do you see the ESG trend in that? Are you contextualizing this already in your due diligence when you acquire a property in terms of getting it to a certain standard? Because some of the then end investors certainly want, because of taxonomy, to put their investments into category 8 or 9. How do you see that? How do you approach the DD around ESG, Constantin?
It is definitely a very important component. I think no one can really deny that. I mean, it's not only a request and requirement from our investors, we also see it as an obligation as an investment manager. It is a big question of the liquidity of the market. We really, focusing on ESG in new build is something that we don't even need to discuss. I mean, no one is probably planning new builds at the moment without at least considering certifications from the very beginning. The big question will be how to implement that strategy into existing buildings rather than into the new build, because obviously every building that already exists would not leave an additional carbon footprint if you need to construct it today. So how do you get ESG, the new office demand into one business plan? It starts with our technical due diligence. There are plenty of very good advisors out there at the moment that help you with an ESG strategy already during the acquisition phase. Our partners, again, have already started to implement ESG within their own companies, so they have ESG specialists. I mean, it's just nothing that we can get around. It has to be focused from the first day of a due diligence.
Absolutely. And Antoine, your perspective on this?
Yeah, no, I agree with Constantin as well on this. But I mean, PAREF being a listed company, we pay a lot of attention to ESG in our strategy so that we comply with our shareholders at the listed level, but also for our institutional investors, for the funds that we manage on their behalf. So we do, of course, understand our role and responsibilities as an investment manager on behalf of those investors to reduce environmental harm and improve society. So the aim of PAREF ESG strategy is to cement our commitment not only towards environment, but also, of course, the S and the G, which is social and governance. So for us as a company is going to be fundamental. But regarding our properties and the environment, we need to reduce, and we are making a commitment to reduce our carbon emissions where and when it's feasible. And this is always considered in our business plan through the life of the investment. So from acquisition, we are going to do during our due diligence, technical due diligence to assess the quality of the property and what needs to be done to improve the quality of the property so that we can achieve the labels for such properties. So we will understand what are going to be the ongoing investment that we will have to make during the life cycle of an asset. So from acquisition, we will do that assessment. During the life of the asset, we will fix anything that needs to be fixed to reduce energy consumption, water consumption, etc., and make the necessary investment so that we can obtain the best labels that are available.
Thank you.
Of course, in parallel, we also, but I need to focus as well on the social. And this is part of when I build a team, we need to pay attention about gender, training, about development path and growth. So all this needs to be considered when we build a local team, because real estate relies on local presence. So this is as well an important factor. And governance in providing transparent reporting and the best in class corporate governance to our investors.
Excellent. So in terms of, we haven't really covered beds and sheds, which is very high on the agenda for particularly German investors. And we had discussions earlier in our web talk series that particularly foreign investors find beds and sheds too expensive. How do you see that, Constantin?
Can you hear me now? Sorry.
Yeah, sorry. Yeah, no. Okay, sorry.
Interesting questions. I mean, that could be probably a topic for a whole session. I guess if I look at our investments over the last 12 months over Europe, yes, Germany has been very expensive, and we didn't see price adjustments as we were hoping to see, and potentially they will come, probably not to the extent that we thought they would come. I think for us it is a bit of a probably more cross-country, cross-border strategy, where we would see portfolios which include German assets, where we see an opportunity. Just plain direct investments in Germany in beds and sheds, we haven't really been very successful. But let's see. Maybe the portfolio idea cross-border helps us.
Yeah. Antoine, from your perspective, I mean, French capital always was very keen on residential in Germany. Do you see that as well, or is this also with your capital sources, beds and sheds too expensive from your perspective?
Yes, I mean, a lot of investors that were walking away from retail and offices, they defined their investment strategy towards logistics and residential, and that amount of capital was higher than the offer. So the pricing was not satisfactory at all for us. So we are not focusing on that asset class, despite, only in France, actually, we have a strategy for residential value add. A value add residential investment strategy, and we have a fund dedicated to that, and only in Greater Paris. And that's the only place where we are looking after residential today. Okay.
And in terms of, where do you see, you both are very active, not only in Germany, obviously, but also on a European scale. Where do you see particularly opportunity in the German real estate market?
For us, if I start, we will continue our investment strategy regarding retail, because actually we have seen that the cap rates were, that asset class being less attractive for investors. We continue to buy shopping centers across Germany, and we have built up around 800 million euro asset portfolio, and we will continue to invest on that asset class because it has been quite resilient during the crisis. Because most of the tenants that we had were grocery, do-it-yourself, and we have, as I said, collected like 95% of our rents. It's a difficult asset class. That's why you need to have a property management team so that you have your staff on the phone to call your tenants, to make sure that they're happy, to make sure that you follow their needs to pay the rent and to adjust and to find agreements, to find an agreement to maybe make some concession vis-a-vis of them. But this has been a very good asset class, and we expect that the cap rate are going to compress in the future, so we to make a good investment. Office, as I said as well, is an asset class that we'll look at across Germany, but we will probably focus on the three main cities in Germany compared to, our retail strategy, which is much broader. And just to come back to, maybe you speak about beds, but residential, I think in the hospitality sector, as Fosun, we are a strong player in the hospitality segment, as we do own hotel operators. And this is a strategy as well where we are looking to expand, but much more on the leisure side, not on the business side. And this is an asset class where we don't only look after owning properties, but also the operation, so that we can control as well and take the advantage of the Chinese momentum when they will be able to get out of their country, so that they can travel within our hotels.
Excellent. I think, Constantin, that's also something you're looking into, right?
Correct. As I said initially, Germany being a key market to us, I think altogether we have transacted about 6 billion in Germany over the last 10 years. We do all asset classes. We do try to buy residential. And as I mentioned, the Lion portfolio initially, we did buy some residential. That was probably very lucky that we were able to buy in these locations. We are still very much into logistic, although again, the German market has been quite difficult. We are a lot more successful in France and in the Netherlands. We have tried to look into more alternative asset classes like healthcare and life science. We have transacted there. So every asset class is interesting for us, but every country has its own angle. In Germany, we are now looking very carefully at the development of the coalition talks, what will happen in terms of regulations, rent regulations for residential especially. In the UK, we have other issues at the moment, mainly driven by Brexit. We're lacking a bit of, we have dry petrol and lacking a bit of lorry drivers, if you might have seen on TV. By the way, I got this letter as well due to my German 7.5-ton driving license. I'm not sure if I will pursue that opportunity, but I was headhunted by the Ministry of Roads and Transport here. So yes, we do see country-specific angles, whereas in general we would always say at the moment, it is about a safe haven strategy. It's about the creditworthiness of the tenants. It's about that investors seek long-term income, and that strategy is then maybe adjusted by ticket sizes and risks that they're willing to take according to the different nations, jurisdictions.
Excellent. And coming back to the earlier chart that I showed at the beginning, how is your view? And Antoine, we exchanged yesterday, and I know already the answer. But how is the international capital doing? Is it traveling again? Is it coming to see assets again? And is it coming to your place? Basically, maybe Antoine, you want to start because I think it's quite interesting.
Yes, I can start. So I know very much, of course, the Chinese situation because this is my major shareholder, and they are back in traveling progressively. Most of them some of them of the senior manager, they moved to Singapore and Hong Kong, so that where they could be vaccinated with the Pfizer vaccine, which is available there, and so that they can start to come back to Europe. Some of them from China is a bit more difficult because the Chinese vaccine is not recognized. So you will not get a COVID pass out of it. So you need to come to Europe, get your 2 vaccinations, and only then, after quarantine, you can get your COVID pass and travel. So, of course, when they start to fly back to Europe, they come for 2 months so that they can do all that process and start to revisit all the sites that we have acquired or that we are currently looking at to acquire, or to meet as well the senior managers or shareholders of corporates that we are currently looking at as well. So they are progressively back, except the chairman, which is also looking to travel back again across Europe, the world, but he has not been vaccinated yet and is waiting. As let's say, Fosun, is one of the main investors into BioNTech, which is the partner of Pfizer. So the chairman needs to be vaccinated by Pfizer. So he's helping Pfizer to obtain the license to be distributed into China so that he can get vaccinated and then travel. So all this, so you'll see them to come back progressively, and the senior management is starting. I mean, I can see from what we do that they are back, but it's still not as before, to be honest.
Yeah. And for you, Constantin, you see, the origins of your capital coming to your office or traveling to some of the properties you are identifying?
Yes and no. So, I mean, it's probably more a question of fundraising in our case, whereas we are now in the course of raising our 6th opportunity fund, EPIS 06, where we see a lot of interest, a lot of revolving investors. And the target here is to get to about 2.5 billion, whereas EPIS 05 was at about 1.7 billion of equity. And here, it's not that the investors would really come to our office to have the final discussions. A lot of that happens through EC. And from a traveling perspective, I mentioned earlier, we are a discretionary manager. So once Tristan is convinced and we, with our operating partners, are convinced, we can transact. So we wouldn't have our LPs visiting the assets. But from a fundraising aspect, my colleagues from the fundraising team, they are traveling again. They are mainly there to visit the investors. And yes, that happens. But we wouldn't see them coming to the actual targets, visiting the asset that we want to buy.
As you said, I think for you it's quite different because this is discretionary money and so they it's to your discretion eventually and obviously to decide upon the assets. Yeah, for me as well. I mean, in terms of experience, we see also that some Asian capital is now coming with Expo over, and we see a similar process as Antoine just said in terms of that they are staying longer and senior management is coming. We have seen parts of the organizations earlier, but now senior management is taking the opportunity to come in the last quarter of the year. Okay, so thank you very much for this very interesting discussion. So now I'm really interested to see what our audience is providing us with questions, and I'm handing over to Juliana, who will ask those questions to us.
Yes, sure. Thank you. I do have quite a few questions. Maybe picking up on the last point. Antoine, did you want to add something to the last thoughts that Matthias was sharing? Yeah, just go ahead.
Okay, I was just going to say that also the tenants are back in traveling. I mean, we have been investing a lot in digitalization to try to help tenants to, let's say, virtually visit our properties. This did not work much, honestly. But it gave them a sense and it attracted them. And now they're back as well in traveling and visiting either retail or office premises to then getting more deeper commitments toward the properties. So this is something as well that we see.
Mm-hmm. Thank you. Maybe taking us back a little bit to the diversification aspects that you were talking about earlier in your portfolios. We have one question that is focusing on the differences between the German markets compared to the UK and France. Maybe picking that up and stating that the UK and France are very much centralized states in comparison to Germany. There's only Poland really as well, with several cities like the secondary cities we have in Germany. Do you see the crucial difference between these markets in that aspect for more diversification possibilities? And also, what about those secondary cities? Which ones are the ones that you would say are most interesting for your investments? Constantin, would you like to start?
Sure. Well, obviously, we follow also the advice coming from Colliers and your competitors. But we see, obviously, we have a top, 5 B cities, C cities ranking. And sometimes it depends a bit on the asset class itself. But I would say we really like places like Heidelberg. We like places like Bonn. We like cities like, I would say, Hanover is still a place where you would feel very comfortable. And then again, depending on the asset class, obviously a logistic asset in Heidelberg doesn't really have a huge advantage, whereas life science in Heidelberg is great.
Mm-hmm. Thank you. Antoine, would you like to share your opinion on this?
Yeah, I think this is true, that statement. In Germany, in terms of office, we will look for sure on the 3 main cities. In retail, as I said, it's going to be more diversified compared to what we do probably in France. In France, we look after maybe 2 or 3 cities as well, but it's less diversified and solid as it could be in terms of office market in Germany, in terms of diversification. So yes, I think it's a true comment, and probably we'll see more investment from Fosun across more cities in Germany compared to France. Right. France, we are very much more focused on Paris and La Défense. Sorry. So in Germany, you will see us more in maybe at the first stage in 3 cities, and progressively we'll see in function of the platforms that we might buy. In which cities will end to be an investor as well.
All right, thank you very much. Matthias, do you think that has a lot to do with the fact that the first 2 cities that Constantin named, Heidelberg and Bonn, are, integrally they're university cities? So is that maybe something, a difference that we have also to the European exterior, the other countries, that we have so many university cities? The UK would probably beg to differ because they have many university cities as well. But is that something that pushes our B cities?
Well, certainly. I think the university aspect is one of many aspects. I think there are a number of B cities that are continue to be attractive, and also where we have low vacancy. This is generally also positive around a slight dip in demand in the office sector. That basically the situation is in most cities that we have really low vacancy rates, and this also applies to a number of the B cities, and that makes them also quite attractive, particularly as still the opportunity is bigger when an international investor with a different view comes into such a market, and can drive value out of property. Yeah, so we see a lot of interest in B and C cities. Yeah, both from a retail perspective, but also from an office perspective.
All right, and residential then follows possibly.
Absolutely.
All right, well, thank you. Taking us to the political aspect of our debate, let's look at the elections that just had place. You briefly touched upon regulations earlier. Many decision makers and professionals in the real estate industry in Germany feared that international investors might not be interested as much in markets such as Berlin, which are facing possibly restrictions and regulations from a political point of view. How do you view the post-Merkelian era in Germany that is kicking off? Also, maybe, Constantin, if you'd like to start with the Brexit topic that you already touched upon in comparison, that is also quite volatile, if I may say so.
Okay, let me start with me being a German. I think as I read, the coalition train is on the tracks, I heard, so they are talking. It seems like there are very important topics being discussed: rent control, ESG measures. Will they force upon investors certain measures? Will there be additional taxations? So I'm pretty confident that there will be a prudent solution on the federal level. I'm always a bit worried about the Berlin outcome, because they like solar actions and they don't really care if it gets ruled out unlawful afterwards by the constitutional court. So with Berlin, I guess investors at the end also trust in the courts in Germany, even if some solar actions are a bit irritating, as the rent freeze. Now, from a UK perspective, I guess, and I've been living a few years now in this country. This country is very practical. They do have those issues, and sometimes people are a bit surprised about the issues that we have here, but then they find solutions, and they find very practical solutions that we in Germany would never be able to find, because we are just not that practically thinking. So Brexit will obviously, and is obviously, a component that people do take into account at the moment: office market, logistics, whatever. But I think we'll get over that here quite soon.
Mm-hmm. Yeah, pragmatism is probably the most essential part for our next coalition that we're hoping for. But Antoine, let me just swear over to you. Paris, you mentioned Paris. We all love Paris, who doesn't? But has a crucial social issue and has had it for over 30 years with, the HLM around the city. And from that perspective and experience speaking, do you think that the debate that's going on in Berlin is to some kind maybe even justified to prevent those kind of situations from happening and to ensure that the value of the real estate that's already there stays at top level?
Yes, I think just to go back maybe to the new coalition, of course, I will be politically correct, and we all expect that they will come with a good coalition in the coming weeks or months, and that they will do well to strengthen Germany and to make sure that cities will remain livable, so that habitants remain within the cities. In Paris, yes, there is two trends. I think there is number one. I mean, the price per square meters of the residential has been increasing significantly, which makes that for rents and for price per square meters. And a lot of people now and citizens of Paris are getting to live outside of Paris and are willing to commute to Paris thanks to the good infrastructure that we do have here, so that they can have access to have actually a bigger apartment or a bigger house with a more livable place. And socializing is becoming more and more an important component. And what we see is that in any restructuring that we do in Paris and Greater Paris, we need to, if we want to do residential, we have to provide as well a component of socializing, which makes, of course, the price, for buildings less compelling for the sellers when we need to comply with such properties. In Paris, we are currently as well going through an office restructuring and to increase the size, and there is a legislation which allows us to increase the size of the office, and we have actually to pay kind of indemnity to the municipality for not doing social housing, and that indemnity is going to a developer for the socializing, property that is building. So there are a lot of consideration that needs to be taken when you do underwrite properties in Paris, so that you can anticipate those costs and issues when you want to restructure properties in Paris. So, that's where actually local partners and operating partners are very fundamental to make sure that you don't make mistakes during your underwriting and that you are capable to manage properly those properties.
Yeah. Yeah, well, thank you. This is already being very focused and detailed on the S in the ESG. Allow me that hard break to swirl over to the topic of E in the ESG. Someone asked, Do you see investment standards on the international level from the company side accelerating that much that, in fact, political regulations are even too slow in Germany? Etienne Denk, maybe to refer to that, he's representative of Fridays for Future, who joined us earlier this week, and he stated that some international investment houses are even thinking that Germany might not be as much of a safe haven anymore because regulations are too slow here to ensure that climate change will be stopped and are not meeting the expectations of international investors. Would you agree with him, or is that maybe pushing things to shove? Constantin, you're smiling. Let me hand over to you.
I'm not sure if I can agree with that. I'm not sure if Antoine would agree to that either. I mean, we have quite a few regulations. They're increasing. I think investors are really eager to comply. They see their own moral obligations to do that, but I don't see countries like the UK, France, Germany with too little regulations, so there would not be, the perception would not be them being a safe haven anymore. Well, I tend to disagree, therefore.
That's reassuring. Antoine?
Yeah, I do agree with Constantin. I think it's if Germany doesn't comply or doesn't become a safe haven, which countries will do? And no, I disagree with that.
Well, that's already a great summary, in fact. But Matthias, would you like to answer that question also from the perspective of other investors that you accompany? How important is the ecological aspect in their portfolios overall, in your opinion?
I think personally, I think most investors are still in the analysis of what they have. Yeah. So in terms of understanding the true CO2 footprint, at least for most investors in Germany, that's the case, and are starting with the measures to reduce that CO2 footprint. Yeah, and I think we will see that with industry standards, and there are some industry standards that are becoming more and more relevant, and also in terms of taxonomy, that will basically move anyhow in the direction that the ESG topic will be an important piece of due diligence and also investment going forward. But I think at the moment, we have also still properties for sale where the E aspect is not really fully achieved, and there's a high demand, across the line from a number of investors. Yeah, so I think we still are in progress. I think the good news is the whole industry is open to the topic and wants to embrace it and wants to impact on that topic. I think that's truly positive. Yeah, but I think we are still in progress in terms of fully understand how we can change things around.
Thank you. Well, that leads. Oh yeah, go ahead.
Actually, if I may add something, I don't rely only on politics. I think this is our duty and responsibility as real estate investment managers to make the necessary to improve actually the energy consumption, CO2 emissions, etc. This is within our responsibility to make sure that we can improve and deliver properties which are going to be as friendly as we can in the future. And we are not going to rely only on politics to define our investment strategy and what we need to do within the property so that we comply, because investors are paying a lot of attention towards ESG. So if Germans are too slow, I don't think that investment managers are slow. I think we are actually doing our best to make sure that we are going to deliver properties which are efficient. So,
I think that's exactly the point of the question, to be honest with you, because being proactive means that there's no need for regulation. And that's something that we can take away as a key finding, I think. But before we go over to the summary, I'd like to thank you for this very vivid discussion and thank our audience for contributing the questions. And let's hand over to Matthias in a second for our summary and the key findings of this hour. Yeah,
so my summary to the session clearly, we saw a dip of international capital, and this was due to the pandemic. I think the 40% last year in terms of capital inflows into Germany was basically true because it was still transactions to be undertaken. Yeah, we have seen quite a significant drop in the first quarter, but the good news is, international investors, as we can see, are back and are particularly active. I think the second finding, I think, is clearly the view on the office asset class from an international perspective versus the discussion that we continue to have in Germany. So I think what we have seen is that the international investors seem much more confident into this asset class and into the recovery. I find that truly interesting. I think the third piece that I think is important, and we talked about it most recently, is the ESG aspect. I share Antoine's view. I think we have a requirement to basically do our best, irrespective of regulations. And I think clearly the industry is very open to this and will comply to this, and also is discussing this. And we try also with this series certainly to further help with this dialogue. So I'm very positive going forward in terms of international capital inflows. We have seen that domestic money has basically taken over some of the percentages most recently, but I'm certain that we're going to be back to 40% level next year. And we are already seeing international investors coming back. At this point, I really like to thank my guests, Antoine and Constantin. Thank you for your participation. It was truly helpful. And thank you very much to you, viewers. Truly, thank you very much for your loyalty, attending our sessions. I hope it was valuable for you. And I'm handing over to you, Jane.
Thank you, Matthias. I can only say exactly the same thing. Thank you very much for being here with us. It's been lovely having you today and all week. And you would like to know what's next? Well, Matthias and I are going to sit down and recap this week of events, of exchanges and dialogues. And that recap you will be able to find on social media. So do follow Matthias Leube's account and our LinkedIn account and stay tuned. We always have something new in store. But for now, let me say thank you for this week and goodbye.